Visa is about to report its Q2 earnings on April 29th. After a strong start to the year, investors are wondering, is Visa still a buy, or is the good news already priced in? Let's take a closer look. Visa had a solid start to the year. In Q1, the company beat earnings expectations with strong growth in payment volumes and cross-border transactions. Revenue came in at $9.5 billion, up 10% year-over-year. Net income was $5.1 billion, and cross-border volume grew 16%, highlighting strong international demand. Still, despite those strong results, Visa's stock is down 2.29% year-to-date. That raises a key question. Is this a buying opportunity, or are investors starting to see risks ahead? Visa's business depends heavily on consumer spending. But with interest rates staying high and spending trends slowing down, transaction growth, especially for non-essential purchases, could be under pressure. New tariffs in the U.S. may start to impact global trade. That matters for Visa, since cross-border payments are a big source of revenue. So far, the effect is limited. But if trade tensions escalate, the risk increases. Cross-border payments have been one of Visa's biggest growth drivers, especially with travel rebounding. But Visa remains exposed to any slowdown in international travel or trade. Visa continues to build out its digital payment ecosystem through partnerships with companies like Stripe, PayPal, and Plaid. It's investing in digital-first infrastructure to stay ahead in a rapidly evolving fintech world. Visa still leads the global payment space, but competition is heating up. MasterCard and American Express are gaining ground, and fintech challengers keep emerging. Even so, Visa's massive scale continues to give it a strong edge. Visa trades at about 31.5 times earnings, which is well above the market average. The PEG ratio sits around 2.06, so it's not cheap. But investors may be willing to pay for a business with fundamentals this strong. Analysts remain bullish. The average price target is around $387, suggesting nearly 24% upside. The consensus is clear. Visa is a strong buy. Last quarter, Visa returned $3.9 billion to shareholders through buybacks and dividends. The dividend yield is modest, at about 0.75%. But the company's capital return strategy remains consistent and strong. Looking at the technicals, Visa's RSI is neutral. There's support near $270 and resistance around $290. The upcoming earnings could be the trigger for a breakout. Heading into earnings, here are the biggest risks: weaker forward guidance, a possible slowdown in cross-border volume, and the impact of tariffs or macroeconomic headwinds. Visa remains a high-quality company, globally dominant, highly profitable, and positioned for long-term growth. At current levels, it looks like a solid hold, or a smart buy on any weakness. Visa reports earnings on April 29th. We'll break it all down right here on the channel, so don't miss it. Hit that subscribe button now.